Yo, welcome back to the channel. For those that are new, we're going to go through the top movers and fallers in my portfolio this week and any stocks that I've bought, sold or added to. So please like the video, it helps with the algorithm to grow the channel. Subscribe if you're new, bottom right hand corner, link down below for a free share up to £200, and also join the board members. I will be announcing more stock picks this week, so you can hopefully end the quarter on a high, end the year on a high. Plus, if you generally want to just talk about stocks, portfolio strategies, this stock, this decision, that decision, then that's the place to be. You can see here from the 7-day chart that it's been a good week. It's been a good week this week. You can see that I was around here, obviously, when the market opened this week, and then obviously, I'm in this position now. So yeah, it's been a good week in the market, and typically it's just based on anticipation of Biden becoming the next president. So that's basically the main sentiment that's been going in the market. But it has also been earnings season. So there's been a lot of movement, a lot of positive movement based off earnings, but also based off the general direction of the US economy as well. So let's get into the top movers, and the first top mover to speak about is AMD, always making dough, and this stock has gone up 14.07%. I will be announcing percentages from Simply Wall Street. The reason why AMD's gone up, obviously I didn't do a portfolio update last week, so some of the information I give to you will be over the past couple of weeks effectively. But when they did their earnings and they had a positive earnings, they released a guidance, and that guidance is basically saying this is what we expect to do in the next quarter. Now, they released a guidance of 2.9 billion in revenue for the fourth quarter, and what they did recently over the last couple of weeks is they actually increased that. So they said, you know what, we don't think we're going to do 2.9 billion. In fact, we think we're going to do 3.1 billion, and that is an extreme vote of confidence from the AMD board, that actually, always making dough is going to make more dough effectively by the end of the year. So I think that's one of the most contributable factors. Also, the acquisition of Xilinx, which is another semiconductor manufacturing firm, which basically diversifies their whole portfolio of all of the semiconductors, chipset and hardware that they obviously produce. That's going through well. That's the $35 billion acquisition. Shareholders of Xilinx is going to get a fixed exchange ratio, which simply means that for every share of Xilinx stock they own, they're going to get 1.7234 shares of AMD. So they're all going to become AMD investors effectively. And what you will see when this obviously goes through is the market cap of AMD significantly increase, and just show how powerful that this company is effectively going to be in the long term. So yeah, I'm happily holding AMD. This is a stock that's definitely going to continue to play a part in my portfolio in the long term, definitely throughout 2021, and obviously we shall see what happens with this stock. The next one to speak about is Opendoor policy, SPAC Nation, IPOB, whatever you want to call it. This stock I'm extremely bullish on. Freetrade is saying it went up 30.10%, but I'm going to say it went up 23.05% this week. This is a stock that I'm extremely bullish on. As I mentioned, I think they're really going to revolutionize the house buying industry. Let me give you some stats. They're saving customers about 11 weeks on average in selling their homes. The average time to sell a home in the US is about 3 months. And now the average time with Opendoor is 1 week. So they're saving them 11 weeks, which is significant. They're saving customers about 5% on fees. So whatever it's conveyancing fees through to agency fees, valuation fees and financing fees, and all kinds of fees that's basically involved. They're saving them about 5% on fees. They're using data and AI to predict and price homes a lot more effectively and fairly. So rather than Roger just coming to your house and saying, "Bro, just price it at 400,000," they're actually using a lot more data and insights to actually give you a much fairer and a much more accurate evaluation of your property. They got 4.4 times more homes than the next biggest competitor. So just to communicate that differently, they've got 440% more homes, more content, more assets in their platform than their next nearest competitor. And we talked about some of their competitors previously being Zillow, Instant Offers, and then there's a few other ones out there as well in the US. And so they're obviously got a significant market share. They're a major player in this space, and they're obviously still quite a new and early company. You know, they've grown about 500% from 2017 to 2019. When they announce their figures this year, I expect them to significantly accumulate and grow more this year as well. They've sold about 10 billion worth of homes through their platform. That's about 50,000 customers. And, you know, they've got a 5% market share in the state of Phoenix alone, and they're in 21 markets in the US. So when you think about them going into more markets in the US, they still got, you know, more than 55-60% of the US in terms of markets to be involved in. When you talk about them potentially going internationally in the future, if you talk about them sustaining their current growth rate, let alone potentially increasing their growth rate and doing more, when you think about more share of house purchases being moved online over the next 10 years, and this company being, you know, the major player in that, then you feel me, behave yourself, man. I might just put another couple racks in there, because I feel like Opendoor is going to be, you know, a very, very significant company over the next 10 to 15 years. I'm not even just talking about the next 1 to 2 years, although I probably will monitor it over the next sort of 3 years and 2 to 3 years. This actually could be a significant company in the next 10 years. You know, I might be doing portfolio updates in 10 years time, all crippled in that, talking about, you know, how well Opendoor's still doing. So you never know what's going to happen in the future, but at this current moment, I'm very, very happy with this. And obviously, as you can see here, I've been continuously adding to this position, and my goal now, I increased my goal. So my goal originally was to get it to a 6 to 9k position, but I'm now going to try and get it to a 10k position, and then just chill with that once 10k's in there, and just obviously let this one ride. So I'm still at a loss at the moment, which is cool. And yeah, I'm not going to make no price predictions with this stock, because I think there's too many unknowns. It's a significantly risky stock as well. The movements are extremely volatile, as you can basically see here, and it hasn't got that much trading history in the public market. So, you know, this stock might not do so well as well. That is a very, very significant thing that you guys have to, you know, be aware of. So please don't buy the stock, you know, thinking that this is a recommendation. Do your own research. And obviously, you know, hopefully I'm expecting it to do well. I'm hoping that it does well, but there's definitely no guarantee with the stock market. So yeah, definitely do your own research whether or not you're going to buy this stock, and see how it goes. The main top mover, or the top mover to talk about this week, is Gucci Mane Lafleur, or Proud Flair, whatever you want to call it. And this stock has gone up 24.05% this week, and that's primarily due to earnings. Remember, I bought Lafleur before the last earnings, so literally about 3 months ago now, and their earnings was good, but the stock went down. And so we did a couple of videos about why stocks go down even though the earnings are good, but obviously I knew that this definitely would not be the case this time around. I knew that if their earnings was good, then the stocks would start flying off the shelf, and that's definitely what they did this week. It started flying off the shelf this week, and you can see it's been on a significant upward trend. And yeah, their earnings was good. So they did a revenue of 114 million, which is up 54% year on year, and beating Wall Street expectations of 103 million. Their earnings, their non-GAAP, was a loss of 2 cents a share versus the 5 cents a share expected. So they expected a bigger loss, they had a much shorter loss, and that's obviously expediting their potential path to profitability, which is going to be an important viewpoint for Lafleur as well. So, you know, I think I predicted them to be profitable around 2023, and for them to have a share price probably of around the $300 to $350 mark in about 2023. So that's about, I'm talking year end 2023. So we're talking 3 solid years from now. But that potentially could be much quicker, to be fair. So, you know, that'll be about a 7x from where it is today, maybe 6x, whatever it's going to be. It's going to be a success. And yeah, I'm definitely going to be holding Lafleur. Will I be adding more? Probably not. If it takes a significant dip at any stage, then I might add more to this position. So if it takes a dip, I'm not going to be worried. I might do so. But currently I'm sitting at 60%. I'm just happy just to hold this stock and just see, you know, what happens over the long term. So yeah, Lafleur is doing well. It's a top mover of this week. In terms of the top fallers, there's only been one top faller to talk about this week. We're going to move across the Atlantic to the British side, and that top faller is Lloyd's. So Lloyd's has gone down this week 2.36%. Britain has now gone in lockdown for a month, a nationwide lockdown. I asked my boy a serious question. I said to him, if we were born in another country, would you buy British stocks? Any British stocks. I'm not trying to pick on one in particular. So this is not about Lloyd's. This is not about Legal and General. This is not about, Boohoo. This is just, would you buy British stocks typically if you weren't born in Britain? And I think the overriding opinion between our conversation was like, you probably wouldn't, if you're honest. And I think we generally have a British bias. I know one stage I had like 20 plus British stocks, which was a combination of the fact that Freetrade didn't have US stocks, and obviously me researching all of Freetrade stocks and seeing these are the ones that I think is going to potentially do well in the future. But I think as a British person, you do definitely have a bias towards British stocks. But I've been changing my strategy, as most of you guys know, and that's going to continue through into 2021. So I did a video, my 2020 vision, which was my strategy for this year. You guys can go and check the video and see that man's basically stuck to that effectively. In fact, I've probably gone a bit more aggressive than I probably anticipated, but I've definitely changed my strategy from where it was last year, and I'm going to expedite that in 2021. So I'm going to talk to you about my strategy soon. There'll be a video coming out about that. But I think when I look at British stocks, they do rise and fall like stocks around the world does. But I think the bounce back ability of British stocks isn't as strong as the bounce back ability, I know it's probably not a word, but I'm just making it up, as say US or Chinese stocks, or potentially even some European stocks. I've got a European stock that's on my watch list, which I'm very, very bullish on, which I'm going to probably be announced this week as one of the stock picks. And their bounce back ability, even when things go well, is quite high. So I just feel like British stocks, maybe it's a finance thing, I don't know what it is, but they've got a lot of challenges that they're basically up against. Even if the business does well, we know that Lloyd's earnings recently was quite positive, and obviously there was no PPI now in their most recent earnings update, and they did well, but then the next day they started tanking again just because of the British economy. So it's going to be a tough battle for Lloyd's going forward. I always said that I think I'm going to wait for Lloyd's until they start announcing their dividends, but what you're going to see in my next strategy is that I'm not really caring about dividends at all, if I'm honest. My focus is high growth, selling at a profit, reinvesting that money and continuously growing my wealth that way. So because of that, I think Lloyd's is definitely a candidate for me to potentially sell in the future. It's not to do with their performance this week, it's just simply the fact that my strategy is changing to something that I think suits me a little bit better. A little bit more high risks, because I generally take risks a bit more. But yeah, that's what's probably likely to happen. So yeah, Lloyd's has gone down this week, but overall, in the grand scheme of things, it's not been that bad. And overall, it's obviously been a positive week in the market. Now, I have sold a stock this week. So there is a stock that you can now see isn't currently available. And that stock, my friends, is Microhard. So I've sold, I don't know why this feature that will not let me click on it now. Microhard, I basically sold that stock this week. I was in profit when I sold, which is good. So I think I earned around 10% if you include all of the dividends that I've earned since holding this stock, which is okay. I mean, I'm not saying it's a fantastic return. It's okay. It's a good return on it. But I'm not going to do the whole spiel about, I think it's a great business and blah, blah, blah. I think other stocks, I kind of need to justify it a bit more. With Microhard, I think you guys unanimously know that this business is a fantastic business and a fantastic entity, and will continue to do well long into the future. So I think that can go without saying. But my personal reasons of selling it is just because of where my personal portfolio is at the minute. Obviously, you guys know I maxed out my ISA. I mentioned it to you. I can't invest new money into this account until April the 6th, 2020. And personally, I can't be out of the market or not take advantage of opportunities for 5 months. I was out of the market for 6 weeks last year, and that's when the whole Divock 91 situation manifested, and I lost out on a lot of opportunities because I couldn't invest. And for me, that caused irreparable damage. Like, I still think that because I couldn't take advantage of certain stocks at that time, you know, I still haven't recovered from that at the moment. So definitely I'm not going to have 5 months out of the market, if can be avoidable. And I think that I can probably use the money that I made in Microhard and actually generate it to make a little bit more money. So yeah, I liquidated it, I sold everything, and the majority of that money actually went into IPOB this week. But then obviously I've left about 1,000 just in case IPOB goes down. Yeah, but the majority of that money went into Opendoor policy this week, and that's significantly averaged down my position from about the 22% loss it was, to about the 3% loss that you can kind of see it being at today. So yeah, that's currently the stock that I've sold, and yeah, if I do anything more in that space, then I will definitely let you know. As for other stocks that might potentially be sold for the same reasons, there are definitely a few other stocks in my potential hit list. And hit list is a strong word. I don't mean that negatively speaking. I mean that from the fact that this is how my perception is changing towards some of my portfolio, which is consolidating rather than having too many different stocks. I'm trying to have a smaller number of stocks with a higher number of amount in those stocks, that I significantly believe in. So yeah, between Lloyd's, Okta, PayPal, Sentiment, you know, I think those are probably the next ones on the hit list to help bolster up some of these other positions that you can kind of see here. And then obviously we shall see what happens in the future. So yeah, that's basically my thoughts on that. So yeah, as I mentioned earlier on, I will be doing a video on my 2021 Savage vision. I'm going to be doing a madness, trust me. Like, my whole focus next year is going to be a lot more aggressive than it was this year. So listen, you know, hold on to your hats or your seatbelts or whatever it is. And you know, it should be a very, very interesting year. And if I don't go clear by the end of next year, then I'm just going to delete the channel. I'm going to delete the channel. I'm going to just move to Turks and Caicos or something and just open up a coconut shop on the beach and just chill in it. I'm just going to delete the channel. It's done. My investing career is over. But I'm expecting next year to be a good year. I mean, I said that for 2020, and you know, obviously the Divox situation happened, so you know, you can never tell what the future's going to hold. But yeah, that's my focus is anyway. Listen, hopefully you found this video useful. If you did, like the video. If you liked the video, subscribe if you're new, join the board members. As I mentioned, there will be more stock picks I'm going to announce this week. And if you want to talk generally, and other than that, enjoy your weekend. Take care. Peace.